Hello everyone, what's up? We are here on another episode of the Send It podcast. I'm here with my lovely co-host, Wajat. How are you, sir?
I'm very good, thank you very much.
That's great, that's just great. And actually, we have a very exciting episode on this one, I think, Waj. We have a guest that I've been hoping that we have on for like at least a few weeks. And we have him on today. Welcome, Haf from Pear Protocol. What's up, man?
Hey, good to join you guys.
Good to join you too, man. How are you? So, Haf, maybe can you tell us a bit about, let's first start with what Pear even is, what's special about it, and then maybe we can kind of talk about you and how did you even got to being a part of Pear Protocol, and take it from there.
Amazing. I was on a call with an investor recently, and they just clicked to them that pear, the fruit, PEAR, that we're named after, is obviously a play on words on the idea of pair trading.
Yeah.
So it's not immediately obvious. This was a good 6 months after he invested. Anyway, we are building the first ever UI and UX dedicated to pair trading. And pair trading, in essence, is a simple trading strategy where you long one asset, say ETH, and then short another asset at the same time, say BTC. Those kind of trades are known as pair trades because you trade two somewhat correlated assets, and it's typically narrative driven, right? So you could do anything. You could go long Doge and short Pepe, so long the dog and short the frog, for example, or whatever it might be. And for a multitude of reasons, pair trading isn't something that a centralized or a decentralized exchange has built a dedicated platform for. We spotted a gap in the market, and so that's what we've come and built on Arbitrum. A user can come, they can, in a permissionless manner, select any asset to long that we have available, select any asset to be simultaneously short, and then we'll execute that in one transaction for the user so that they can manage their risk accordingly, monitor all their pair trades accordingly, and each position is cross-margined if you need that feature as well.
What are like the
Why do
key
you think
benefits?
pair trading is such a big thing in crypto? I mean, I see on crypto Twitter all the time people talking about ETH BTC, ETH Sol, like all of these ratios that we look at all the time. But why is it such a big deal? I mean, I don't ever see people comparing Apple, Microsoft. Why in crypto is it such a big deal?
So in TradFi, it's a big deal, this concept of pair trading, but it's done primarily by hedge funds. And so in the TradFi world, the concept of a hedge fund is to be hedged, right? And the genesis of a lot of the early hedge funds was to be long short. So to long something like Apple and short maybe Meta against it, or to long JP Morgan and short Citibank shares or whatever.
Yeah.
So in TradFi, that principle has been there, but it's been very much an institutional play for a long time. In crypto, I think pair trading has been born out of the early days of kind of Binance and other centralized venues where you traded alt BTC pairs. And the whole idea was to stack more Satoshis, right? The whole idea of trading these altcoins was that you were denominated in Bitcoin. And as long as you made more Bitcoin, you were doing well. For a lot of traders, that mindset has still stuck. So when they chart something like Sol USDT, they'll chart Sol BTC at the same time. And the thinking there is, if I'm not going to outperform Bitcoin, then I might as well just hold Bitcoin, right? So I need to look at Sol BTC, or I need to look at ETH BTC, or whatever the ratio is relative to Bitcoin. And so for the traders that have been around now, 2017 is a good 7 years ago, that mindset has somewhat stuck. I'm from that kind of school, if you will, of 2016, 2017. I remember this idea of stacking Satoshis. And so for some of the OG traders, I think they think in that paradigm. For someone who's new to the space, I think they definitely think in USDT terms, and they think, Sol is at 83, 84. Right? Do I want to long it or do I want to short it? But the genesis of trading on chain was always to be denominated in Bitcoin and to stack more of it.
No, I totally agree. I think that's kind of how I think, especially when I go down the risk curve and look at kind of higher risk altcoins. I kind of always compare the ETH chart to it, and often the case is I'm probably better off holding ETH, but for some reason I still choose to go down the risk curve and pick some of these alts. But yeah, it certainly makes it certainly is a big deal. I think for even retail that I see anyway, day to day, pair trading a big deal. Yeah, for sure.
For
And
retail,
you
it's
have these like hardcore, sorry, DFIs, you
no,
have these like
no, no.
hardcore decentralization maxis who denominate themselves in ETH terms, right? So
Yeah, absolutely.
they think, oh shit, I need to either be earning more ETH, or I'll just hold ETH. And again, that's why you have like Sol ETH, or you'll see people charting Lido ETH or whatever it might be.
Yeah, it makes sense. I often look at my portfolio in BTC terms.
I think pair trading in a way is one of the simplest crypto like DeFi products you can imagine. Like I think it's exactly the kind of stuff retail is looking for. Because with retail you can't start. If you even just say the words like LP, that's done. The conversation is over. You know what I
Yes.
mean? But with pair trading, I really liked I saw a few memes of you guys by you guys in the last 2 weeks or something, and it's like so simple. It's over like one coin good, one coin not. That's all we want. You know what I mean?
So
Most of
to be
us.
honest, like our whole go-to-market strategy is a barbell strategy, right? And on the left-hand side of the curve, or the barbell, if you will, is the kind of degen retail thinking. And it's somewhat right, which is I think this asset, let's say Pith, is going to outperform Link. So I'm going to go long Pith and short Link. And essentially it's community driven a lot of the time. Like the manlets think they're going to outperform the ETH maxis, right?
Hmm.
Or the the Arbitrum community think they're going to outperform the Polygon community, whatever it might be, right? And then the far right side of the curve, of the barbell, if you will, are the more liquid token funds and crypto traders and people who think, oh, these two assets are correlated. I can trade them in a market neutral way. I can offset my collateral and have kind of cross margining, and I can make a good net return with a good risk, well-defined risk parameter and a decent, much lower volatility. And I think to D-Advisor's point, you kind of span the whole spectrum with pair trading, where you can be really degen and kind of narrative driven about it, or you can be really kind of complex and get into the math of correlation and betas and all the rest of it. And you, across the whole spectrum, there's a space for anyone to do any pair trading.
How did you come up with the idea, by the way? Like what made you guys actually decide that okay, that's our niche?
So if I can recap, because it's probably important to talk a little bit about my own background. So I'm a trader by background.
For sure.
I worked for an investment bank in London on the trading floor for about a decade. So I worked for Deutsche as a derivatives trader there. And then in 2019, I went full-time DeFi. So I've been in the space for about 5 years now. And in that time, I've done a few things, including running an on-chain crypto project where we were basically like farming for yield, right? And there were two things that we were doing as part of that mandate, both in terms of what we were doing on-chain, but also off-chain mandates that we had, which were to generate returns. We were selling volatility, so selling Bitcoin calls and ETH calls, and pair trading. And the pair trading we were doing was very narrative driven. So around the time of the merge, we went long ETH and short Ethereum Classic as a mean reversion trade. And around the time of the FTX collapse, we went short Solana and we paired it with a long layer one trade with long Atom. You could have picked any layer one, really. In the process of doing those pair trades, I realized as a trader myself that pair trading is a nightmare. It doesn't matter whether you do it on DYDX, whether you do it on Binance or elsewhere. You have to open these individual longs, open these individual shorts. You've got to post margin against each leg, manually calculate your P&L. And if you build a portfolio of pair trades, it's a nightmare because your positions end up getting aggregated, right? So if you're long ETH on one position and short ETH on another, you have a net ETH exposure. And up until now, it's been a nightmare, and yet people still pair trade. You can look across Twitter and the likes of GCR or Ansem or Puggy or any of these like big crypto Twitter traders. They do pair trading, but the platform doesn't really exist for most people to access this strategy unless you really know what you're doing. And so the way I like to think about Pair is I'm the first user of Pair. I've built something where I am solving a problem for myself. And in the process of doing that, we've spoken to everybody from retail traders right through to some of the bigger crypto funds. And there's a space in the market for us to do that and build that. So that's where the idea came from. It was a pain point that us and our peers were experiencing.
You know, I've been talking to a few founders these past few days, and this topic keeps coming up of the fact that you know what, the kind of founder that I'm like looking for the most on my investments, at least, is the founder that's trying to like just build something that he wants to use. I think it makes the founder come from the most like organic and natural place that he's really after this, you know. He's actually going to solve, he's going to build it because he wants it and no one else has already built it, and like he needs it and he needs it now. He can't wait for someone to maybe build it at some point. So I think it's probably like the ideal situation in my mind, at least. And again, not financial advice, of course, guys. Like you should listen to someone serious like Waj and not myself, for sure. But you know what I mean.
I think when you have, I think that, to be honest, that's how it should be for every project. The idea should come from an actual problem, and the product should be something that I think if you're not going to use, why are you building it in the first place?
Yeah, and also there needs to be like an inner challenge of the founder, in my opinion, like an inner quest, which is not like he's not building it just in order to succeed, you know, and to take it okay, and he's gonna be rich and famous and make a lot of money and stuff. No, he doesn't really care. He wants to invest, like he wants to do A, B, and C, and he has no platform to currently do it on, so he's gonna build it regardless. Now, if you guys all want to come and use it after it, so be it. Like, why not? But he actually wants to do it himself, so he will keep just working on it and improving it and take it to the next level, because it's something that he's actually like already like in a state of mind that already making into a reality. Like he needs a specific like type of product, and he's not going to wait around for this stuff to be built by someone else. And I think that this mentality is something that separates a lot of the builders in our space from others, and I'm definitely after it. And so it's very fun to hear you say that, Haf, because I really think it goes to show about just how much you guys are actually approaching it from the direction that I really respect, for example.
I think it depends what you're building. Like if you're building an infrastructure layer, I think you can be very business minded, right? And be like, I need to build this. It's going to make this much revenue, and it's got a space, and I'm helping like whatever, right? I'm either helping myself and making money, or I'm helping scale blockchains. At the app level, though, I think it's really different, which is I'm building an app where like I really understand the problem, so much so that I'll be the first user. And I think there's a bifurcation between people who build infrastructure layers where it's definitely a commercial decision, and people that build apps where there has to be a bit of head and heart that goes into it.
Yeah, definitely. So Huff, could you tell us and the viewers as well, what are the products that Pear Protocol has at the moment, and kind of how does someone who's new to it use them?
Maybe we can show it on screen, by the way.
I should be able to. Can I share?
But if not, then no worries.
No, I can definitely do that. Let me.
Because I think that it will be good to show like maybe a bit of the workflow.
Perfect. We can see that.
Right.
Sure. So we're pitching ourselves as the home of pair trading, because as far as we're aware, we're the first and only people to do this. Now, this is all on Arbitrum mainnet. We've been in closed beta for the past few weeks, testing. And to answer your question, we have, let me just switch to Arbitrum. We have 3 products. So we've got an isolated margin product. Their isolated margin meaning the margin that I post against one trade can't be used for another. That has some downsides, but also some benefits, meaning you can have much higher leverage with isolated margin. Cross margin, which is what most people would kind of expect from a pair trading engine, a little bit more flexibility in terms of the underlying assets available, but then leverage is somewhat capped. And then a third product which we can talk about, which is intent-based. So that's a completely different way of trading the underlying liquidity. So in the case of the isolated margin product, we built on top of GMX V1 and V2. So that's where we source our perp liquidity. The cross margin product has been built on top of Vertex's SDK. so on top of an order book. And then the intent-based platform is partnering with Simio, and we integrate and face market makers and solvers directly. So I'll show you the cross-margin product. It looks like this. So you enter the trading app, and forgive my somewhat slow internet, the chart should load up here, and I choose an asset to long. So let's say I want to go long something like Pith, and maybe short, let's say something in the same sector like Link. So I can see the chart of how this has evolved over time. I can sort by today's winners. So SUI OP is obviously a clear winner on the day. I can put my collateral down here, let's say 50 USDC, slide up my leverage, and open the position. And I can go ahead and open this position in kind of one click if I choose to do that. So I did some trades earlier. They're underwater, long ARB and short Matic, which is kind of an EIP 4844 trade, and then long DYDX and short BNB, another kind of narrative trade. And I can close those in one click too. And so in essence, that's what we've built. We've built a pair trading platform where users can permissionlessly select any asset to long and short at the same time. What's really exciting for us is the intent-based thing, which I alluded to. And if I can quickly show you the first iteration of that, it will pretty much look somewhat similar, but you'll be able to select from over 200 assets. So pretty much
goodness.
So pretty much everything that's on the Binance order book, you'll be able to trade. And in fact, show you, we actually are in MVP right now, so a little bit of alpha there. If I can.
Always good, always a
No
pleasure.
worries. If it works, in fact, I'll share on another screen. Let me share a different screen, 1 second. Here we go. So I did some trades on here earlier today, and I opened like a long Doge short ADA trade, and this is all kind of working as well. So this is with the intent-based kind of solver network on the back end of that, and I can do anything here. I could go long SUI and short SAY, or I could go something more topical and go long WIF and short bonk, for example.
Can you explain a bit about the difference between the intent one and the others?
Absolutely. 1 second. Let me see if this will let me open a trade.
Oh, and by the way, another small question, probably a very left curve question, but is pair trading is always one long, one short?
Yes, but there's things that we're going to do in the future. So I've just opened the WIF bonk trade here. There's things that we're going to do in the future, which add even more flexibility. So you might be able to go 80% long and 20% short, like a sliding scale, if you will. We also want to do thematic baskets where you could be long like a basket of AI tokens and short Cardano or something against it.
Always Cardano, man.
Just, more.
When you don't know what to put on the other side, you just put ADA there and you say,
There
okay.
you go. So it doesn't necessarily have to be one asset versus one asset. There will be kind of flexibility to tailor that over time as well.
No, that's brilliant. That's brilliant. One thing I wanted to ask was, what made you choose to build the isolated and cross-margin products on top of GMX and Vertex? Was there something that you really liked about those perpetual exchanges, or was it to do with the ease of integration?
I think it was a combination, right? So if you look at this problem of building a pair trading platform, you have to source liquidity. Now, where was liquidity and where has been liquidity deepest? It's been on Arbitrum, right? And so the choice to go to Off-Chain Labs was a very natural one, to Arbitrum rather.
Yep.
And then within that, you had to look at protocols where we needed to start testing whether this concept can actually work. Can you atomically execute two trades at the same time? Can you tokenize them as one trade? Can you close them in one trade? Can you have all the collateral and P&L flowing accordingly, etc.? And so GMX was a great place to start because GMX has been built in a truly decentralized manner. right? So you can interact directly with their smart contracts. They, as a team, are very receptive to people building on top of them as a liquidity layer. And I must say, like a shout out to like Tano and CoinFlip and the guys there. They're super helpful as well. If you need a question answered from their devs, or if you need any marketing support, we're getting a builder grant from them as well to incentivize liquidity and incentivize people to trade on our isolated margin product. And so for us, it was a great fit to work with them. I think from our user base, one of the limitations of GMX is its isolated margin, meaning if I open a long ETH short BTC trade with 50x leverage, one of the trades could get liquidated on a 2% move. And then I have the winning leg still running, right? So like hopefully I've made more than 2% on that. And so you can still make a lot of money on the isolated margin product, but some people want cross margin. They want the collateral from one winning position to offset the collateral on the losing leg. In some ways, it's more pure pair trading. It reflects more how TradFi is done, where you have kind of margin against every position in your portfolio. And so for us, working with Vertex and the order book there was a natural fit because they've built pretty much the superior kind of CLOB alongside DYDX.
Yep.
Integrating with their SDK is not an easy task. It required 5 times the manpower and time of integrating on top of GMX. But again, like Darius, the founder there, is a friend of mine. He lives like pretty close to me. We opened.
Ato is British as well.
Big up British builders. And he similarly, like in the spirit of Arbitrum and the spirit of collaboration and DeFi, opened up his dev network. We have a chat with 15 people in there, and they're asking each other questions all day long.
No, that's brilliant. That's brilliant. So was DYDX ever in the question as well, rather than Vertex?
The DYDX, obviously, when we started, was on Ethereum only, and migrating to V4.
Yeah.
Building a front end for any kind of trading on Ethereum is tough from a kind of gas and efficiency perspective. And then their move to their own kind of app chain is interesting, but it's very experimental for anyone that wants to build on top of them, especially when there's still things that are work in progress over there.
Fine, fair enough. Makes sense.
When we were talking the other day, watching myself before the interview, he told me that you guys have like a very unique solution for liquidity. That you guys actually like draw liquidity from centralized exchanges or something like that.
Yeah, so that's the third product, right? So the first product on top of GMX, the second product on top of Vertex, and the third product, the intent-based product, which basically taps into a network of solvers. And the solvers have full flexibility on where they hedge. So they could hedge OTC, they could hedge on Binance, they could hedge on any other SEX. And so when I showed you the availability of 200 plus underlyings, that's because our solvers can hedge anywhere. And so they can make markets on the majority of those underlyings. So it's this whole kind of idea of automated market for quotes or intent-centric perps, spearheaded by Simeo, who have a number of front ends that they work with, ourselves, IntentX, I'd say are the two leading two that you may have heard of. For pair trading in particular, it's really powerful because if you think about pair trading, every trade is bespoke, right? Nobody wants to do the exact same pair trade. Somebody wants to do, let's say, long ETH short ETC with 7x leverage, and they want to use DAI as collateral, right? That's a bespoke trade which a solver can come and solve. If you want to just go long ETH perps with 50x leverage, there's already like a lot of places you can do that. Do you really need a solver to help you there? Maybe not, mate. But as you go like down the spectrum of bespokeness, if that's a word, having a solver network definitely helps.
For sure.
So I think the intent-based system is really, really interesting, and it looks like Simeo are really leading that. But what I'm interested to know is, and I think some of the viewers are, we all hear about some of the pros about the intent-based system, but what are some of the cons against it? What are some of the things that potentially aren't so good, or some of the drawbacks that we have with using intents rather than the other products?
Yes, I think one of the big ones is latency. So if I think back to the position I just opened on WIFBonk, there was a timeout there of 300 seconds. And unlike an order book where liquidity is kind of sitting just ready to be taken.
Yeah.
Here, the market maker has to agree and take the order. Now that process is automated, and you saw that I executed the trade within 5 seconds. But there could be scenarios in which the market's moving quite fast where you compromise latency and you don't get filled straight away. So that's, I think, one of the bigger kind of drawbacks. The other thing I'd say, what are some of the... I think for a user, like in terms of simplicity of flow, it's really easy to understand what's happening when you deal with an order book, right? You know exactly how much you're going to get filled, and you can have your limit orders and stop losses and everything in place. And those trading engines are tried and tested. It's only now that Simio is solving the problem of stop losses and limit orders. But as a risk management tool, I'd say you're still like in the first innings of really perfecting that from a trader's perspective as well.
How do the fees compare?
This is interesting, right? So when you trade on an order book, it's super competitive. So if I traded on DYDX or Vertex on a top 5 asset like Bitcoin or ETH or Sol or something, you're basically playing like 2 or 3 basis points of spread, right? 0.02, 0.03%, if not even tighter than that, depending on like what your fee tier is and things. The solution with Intents is around the 4 basis point mark. And that can come down depending on a combination of rebates and discounts and things as well. So I'd say it's pretty competitive. Where it becomes even more competitive is on the longer tail of assets, because you've seen that someone like DYDX have had the same asset universe for the past 2 years. It's very slow for an order book to add a new underlying, but something like the intent-centric network, you can add a new perp quite quickly, and you can reflect the liquidity and the spread that you get pretty much on Binance or elsewhere, right? The market maker just charges a few basis points on top. And so in terms of both liquidity and fees, it's very competitive.
Yeah, no, I've seen IntentX. They've been releasing like new pairs like every other week, which has been great to see.
Yeah, exactly. And big shout out, I'm a big fan of Levy and everything that they're doing there. And that's pretty much the idea, right? That for longer tail of assets in particular, the go-to place on chain is going to be these intent-centric platforms where you can have access to whole of market liquidity. As of today, what that looks like is pretty much everything that's on the Binance order book, given that the solvers can hedge them on Binance. But over time, there's no reason why you can't include any asset that a solver's happy to make a price on.
No, that's brilliant. Thank you for sharing that.
Who's the for sure. Who's the audience, by the way, Haf? Is it just retail, or are sophisticated users having an interest in such a product as well?
For Intents or for Pair?
In general, I mean, maybe for both.
I think for Pair, like the challenge for us as a team is this product can benefit anybody, right? From a retail trader right through to like the more sophisticated trader. The challenge we're going to have as a team, and I think part of the reason why no one's built this yet, is educating people about pair trading. Educating people that it doesn't matter if the market goes up and you're long Sol ETH, you make money. It doesn't matter if the market goes sideways and you're long Sol ETH, you make money. And it doesn't matter if the market's going down, as long as Sol outperforms ETH, you make money. And you definitely lose a lot less than you would if you were just outright long Sol or outright long ETH, right? That sounds really simple when I say it, but it hasn't clicked for a lot of people that this is a really powerful tool that you can use and use in your arsenal. Now, for us, we're really fortunate because we've been in the kind of trading communities, either in Discord or Telegram or offline. So we know a lot of these users and traders, and they span across the entire spectrum from retail right through to institutional. I don't have a target user in base. I honestly think anyone who currently trades on GMX or Vertex or IntentX, if they want to do some pair trading, we can be the go-to home for that.
Have you how many people are already using the app?
We're in closed beta. meaning you have to have your wallet whitelisted to test. We've had 122 unique users come into our Discord, and pretty much 70 to 80% of them have given detailed feedback. So I'm really kind of bullish about product market fit, because even though we've had a wallet cap of $25 per trade, we've still done like 600-700K of volume, which in absolute terms is tiny. But if you think about that relative to how many users have come in and tested it and given feedback, when we do remove the whitelist requirement and people can trade an uncapped amount, I can see us doing like hundreds of millions of volume in the first 2 weeks.
Wow. How far away is the release?
So as of now, our isolated margin product is pretty much ready. It's being migrated to be on top of the GMX V2 contracts. And like I said, we got a grant from GMX, so a builder grant. So what we will be doing is incentivizing trading on there, essentially such that your trading fees will be close to zero if you trade on that platform. So imagine trading ETH BTC for like pretty much free from an execution cost perspective. The cross-margin product, we're just ironing out the last few details and adding some more underlyings and updating the UI and the UX for that, which is probably mid-Feb. And then we want to launch the two products together. So isolated and cross in kind of mid-Feb. The intent-based product is currently being deployed on Arbitrum. There's still a bit of testing that needs to go on there, but we're looking to have that out by the end of Q1 as well.
No, it's brilliant. It's brilliant.
That's cool. Is it audited already, by the way?
So we're currently doing a private audit. So I know White wanted to talk about the process of being a builder. So one of the things I can give you an insight into is a lot of the time you'll see a public audit by someone like Sherlock. And when Sherlock give an audit, they publish all their results, and then you have to kind of fix those bugs as you go, right? It's very much a public show of strength, if you will. What a lot of projects do before public audit, so as to not embarrass themselves, is they do a private audit, and they'll get independent security researchers, or in our case, we're using Shieldify, and they'll go to a team of 4 to 6 independent contractors, and they'll basically say, hack this thing. Right? So right now we're in the process of getting a private audit done, and then we'll move to the process of doing a public audit. So the private audit is currently underway. Like I said, we're using Shieldify. They've come up with some minor points to fix, and so we're working through those as well, which is why I'm kind of looking towards mid, if not end of Feb, to launch both products.
Sounds good. And thankfully, I was able to get one of my wallets whitelisted. So I had some good fun over the last few weeks playing around with the isolated margin products. I've had great fun with it. I traded...
What? What did you trade? What did you trade, man? Come on.
Long Link and short ETH. As Link was kind of moving up, so that was a good trade. Then I traded ETH BTC as well.
Nice.
So I had some good fun on that. One of the things I just remembered actually was that
classic. I went with the classics.
Yeah, I just remembered there was this option to mint an NFT, like regarding, was it my P&L card or something? I can't remember exactly. Huff, do you know what I'm talking about?
I do indeed. So as much as I'd like to say we've built a trading platform, which we have, one of the key innovations that we really want to bring about is tokenized trading positions. So what I mean by that is you can create a long ETH BTC trade. Currently, this is only in isolated mode, and then mint that trade as an ERC 721, so as an NFT.
That's so cool.
Now, why would anyone want to mint your trade as an NFT other than the bragging rights, right? Of saying, oh, look what I did. 21, so as an NFT. That,
because you want to sell it?
You can do a few things with it. One of the things you can do is you can sell it. So if you're an influencer, let's say you're Ansem and you've got long Sol ETH and you're up like 1,000% on it, you could close that position and sell it back to the platform, right? Or you could put it on somewhere like OpenSea and one of your followers could buy it from you in this kind of OTC manner, if you will, for bragging rights to say, I physically bought Ansem's position from him, right? So that's option number one. You could sell it and you can create a marketplace for these trading positions. The second reason is to transfer your risk across different wallets. So if, let's say, what you put on a trade and you're on the go on your phone, you could put the trade on Pear, and then you could actually take your NFT, transfer that to your hard wallet, let's say. The position will drop off your dashboard in your cold wallet, and then it will appear in your hard wallet over time. So you can transfer your trading position across different wallets, which mirrors this idea of sub accounts that you have on sexes. But even within sexes, you can't move your trading risk from account to account, right? Binance account number 1 to Binance account number 2, or Binance to KuCoin, or Binance to OKX. Now you can do that on chain. And then the final reason for tokenizing our position as ERC 721s is we open up this world of composability. So if you think about your trading position, you can then take that as collateral and borrow against it on somewhere like Pine or Defrag or any of these NFT platforms. And and because the NFT has economic value, it's got collateral in the form of USDC, and it's got 2 perps. The metadata is ticking in real time. So if you're a borrowing platform, you can actually create very simple risk metrics and say, oh, we'll give 40% LTV against this, right? And that's something else that we want to kind of bring about. So yes, sell it, borrow against it, or transfer it. They're the 3 use cases of tokenizing your trade.
These are actually such cool possibilities, man.
Yeah, like zooming out, man. I don't want to get too philosophical, but zooming out, it's one.
Right, go philosophical, man. Go philosophical.
In my mind, people don't really build that much exciting shit in DeFi anymore. It's always like a fork of something else, or especially at the app level, right? Like, yes, you have amazing things with EigenLayer and amazing things with liquid restaking and Celestia and data availability. And at the infrastructure level, there's some interesting stuff happening. At the app level, it's become this complacency game of I'm going to fork this from this other place, and I'm just going to send some memes and get a community together and launch a token, right? And when we thought about Pear, we were like, we really don't want to do that. We want to build some cool shit at the app level, right? That users can get excited about, like they did in the kind of DeFi summer. And so for me, it was important to not just build a trading app for something that I'd be the first user of, but to push the limitations of what's possible within DeFi trading, especially if your competition is a SEX, right? Because the people that are going to trade on Binance, they're going to trade on Binance. Tomorrow, you had the worst series of FUD on Binance, and yet people still kept their assets there. And you're not going to bring them over unless you do at least 1 or 2 things that you just can't do on a SEX. And this is pair trading, and then the tokenization of the trades. We believe are 2 things that you just can't do on a SEX.
True. But by the way, I think another question goes to but how do you educate the audience about these things? Because if they don't know it, and for the usual Binance trader, they don't consider the concept of position tokenization. You know what I mean? They just want to, okay, this is up, this is down. About the first mechanism of Pear Protocol, I definitely agree. I think it speaks to retail, maybe in one of the most clear ways that any other protocol that I know in DeFi speaks to retail. Because I think that a lot of what you're saying really makes sense in the way that a lot of these apps for people who are actual retail investors and are not really that much into finance, this is it might as well be Chinese apps. You know what I mean? If you want to tell them okay, yeah, this is a lending market that you can tokenize your asset and you use it as collateral, but they don't even know what you're talking about. You know, all they want is yeah, but this look at how much this token is going up, man. Look at how much that token is going down. So on that specific aspect, I think that you really you have a way to reach retail in a way that pretty much not many are doing in DeFi currently. I can tell you that I'm talking to some founders who are building some really interesting stuff on the app level as well, because I agree with you. There's a lot of boring stuff, at least for for simple users who are not really sophisticated users like myself. But I do think that stuff is coming out because people know that, the bull is coming one day. Like one day there's going to be a bull market. And with the bull market, liquidity is going to come. And with the liquidity, a lot of retail investors are going to come. And retail investors, in order to actually use the DeFi apps, I think you're right. They're going to have something that makes them want to move their funds out of the comfort or the imagined comfort of using it on a sex. But to most retail users today, even to get their money on a wallet is not that simple. I remember when we had the Vertex, Darius from Vertex a while back, he told us that they want to make the whole experience of trading on the DEX they don't want the consumer to even know it's a DEX in a way, because it shouldn't it should be on the back end. It shouldn't necessarily be on the front end.
Yeah.
So I'm very curious actually about maybe your marketing strategy, because I saw some of your stuff and I think it's very funny and it's very complementing to the product itself. It's really taking the key principles of the product itself, of simplicity and fun, and using it on your I don't know, memes and fun tweets and stuff like that. So how do you really think that what can you guys do other than stuff like that to actually reach retail at some point, and to be able to actually pull them out of this centralized exchange experience, and to actually get them to start using the dApp itself, and from there, who knows what kind of dApps they're going to use in the future.
Yeah, good kind of question, right? So it's an uphill battle to get somebody to trade on-chain versus a SEX if they're not doing it already. And I can speak from personal experience here. The reason why I would do my trading on a SEX like Binance is because they have deep liquidity. They've got a wide range of underlyings. They've got a mobile app so that if I'm on the way to the airport, I can close my risk or monitor my P&L or whatever it might be. And that's pretty much it, right? Now, the first two of them we're solving with the intent-centric framework, meaning you have access to deep liquidity. You've got access to a wide range of underlyings. And now the third one, okay, we're not going to have a mobile app that's the same as Binance's iOS app or its Android app, but you can build these progressive web apps, PWA, right? And you can have an additional benefit of self-custody. And then you've got all the other benefits like we just talked about, right? The idea to tokenize your trading position, the idea that you have a pair trade that you can manage in one click, which you just can't do on a SEX. So I think in order to appeal to these people, our market research, what it's basically taught us, is you're not going to be able to compete with a Binance if you're just offering the same thing, right? So like a DYDX, it's going to be really difficult for them to get the top 20 traders from Binance to go over there. Whereas in our case, what we're trying to do is get the thousands of people who are tier 3, tier 4, and they're on Binance, they do the occasional trade, to come on chain and say, hey, look, rather than get liquidated left, right, and center on Binance perps with high leverage, come to Pair, do a pair trade. You might not make the same returns as before, but you can do this in a much more kind of risk-managed, narrative-driven way. The way we like to think about it, and to your point about the memes and everything we're writing, it's a really simple story, which is you long the strong stuff and you short the kind of garbage against it. And this works in any market scenario as well. So we've seen in a bull market, everyone's a genius and you just keep clicking. But in a sideways market and in a bear market, or what we call a pair market, that's where you've got to really scratch your head a little bit more about how you're going to generate returns. And that's where pair fits in nicely. For me, a market like this, which is chopping and going downwards and sideways, and people are like, oh shit, I keep losing money. That's the best kind of scenario to promote Pear Protocol.
By the way, I know that it makes me actually think of a different direction than what I was thinking before, because you're actually in a way saying that that a bull environment is not necessarily that good for Pear Protocol, because everything is going up. There's nothing to show.
Oh, 100%. I can give you an insight into, as a founder trying to raise money, right? The VCs that we spoke to, you'd be amazed how many of them were like, bro, we're in a bull market, just long Sol. Why do Sol ETH, right? Or they'd be like, bro, we're in a bull market, just long ETH, don't do ETH BTC. And I kind of get it because, like, if they're thinking that way, right, and they know what we're doing, right, they get it, and they're going, in my opinion, they're going from the right-hand side of the curve to the left-hand side of the curve in terms of thinking about it. I get it. Like in an absolute raging bull market, it would be wrong of me to suggest that you pair trade unless you're looking for those lower return, lower vol kind of market neutral returns, right? That's a different mandate. Absolutely, but the majority of the time we're not in a raging bull market. And even if we are in a bull market, it's only like 10 days out of 365 where you get those bull market returns. Most of the time in crypto, prices are ranging or chopping.
Yeah, no, that's so true.
Yeah, and there's always like it's always like even in like, you know, if it's a full green day, okay, there will be some red, you know, some will actually lose money. So it's actually even like it makes it like a sexier challenge in a way to in a bull market to still be able to find those who just can't keep up and they're actually going down on a bullish
There you
day.
go, DFI. So maybe we should hire you as our kind of marketing guy. You could.
I think you guys are doing a better job than I could at this point. I really thought some of the memes were pretty funny. You know, there was that one that kept coming back where there's like I don't know, like a big drawing of the whole crypto industry, and all of a sudden you have like Cardano holders, like you know, separate. And then a few days after, maybe after some Link stuff, you see the same drawing, but with the Link Marines as well. Actually, shout out to the Link Marine. I'm actually like a big fan of the project there. But I do think that, also when you showed it earlier, especially when you chose like the Pyth and Link example, it actually made me like, before I used to even be interested in crypto and markets and finance and that kind of stuff. I was kind of a sports like a sports viewer addict. I used to watch sports like religiously. I worked at a while back at a company where we used to analyze soccer matches, football. If you guys are from the UK, I can call it football. You know what I mean? So we used to like analyze football games, and I think that trading, in a way, in general, investing in general, and specifically trading, has that like I don't know, like competition and sports element into it. And when you actually put it in a pair trading, it even makes it more similar to sport because it's actually like betting like teams. Okay, I'm on team Link, I'm on team Pyth, that guy is on team whatever, and I think it speaks to a very like basic human like desire and need to actually choose sides. You know what I mean?
Yeah, I think so. And that's like part of our marketing strategy, right? Is to get these communities to put these trades on. The one that kind of comes to mind all the time is Solana ETH, but it can apply to anything across the crypto space.
Yeah.
But I like your football analogy because crypto ends up being very tribal like that at times. 21. So as an NFT.
It is. But all stuff are like that, I think, in a way, because us as human beings, we are tribal. And we can try to escape it as much as we want. But when it comes down to the actual facts, in the moment of truth, we choose our tribe. Even if we pretend that we don't care about it and whatever. But when an actual moment comes when we have to choose, we know what tribe we are. And I think that with this concept of pair trading, it kind of simplifies so many of the elements in finance and whatever. It just tells you, like, come on, you can pick sides. You know what I mean? So I really think it's a very cute concept, and I'm very curious to actually see how the participants are going to react. But not only the new participants coming out of sexes, hopefully. Also the like more experienced DeFi users who are already on chain, very curious to see what kind of responses you guys are going to be getting from them. especially once more and more people start dealing with it, and it's going to get like a more a community element and a social element, because people are going to talk about their trades again. You know what I mean? It's like the competition never stops.
Absolutely.
Huff, there was one thing I wanted to ask, and it was about the revenue model that Pear Protocol has. Like, how do you capture fees like on top of what you've built so far?
So that's pretty simple. 100% to Huff's wallet. That's the solution.
Only way to go, man.
The way that we do this, so clearly there's an execution fee depending on the liquidity layer, right? So in the case of GMX, it's a few basis points. In the case of Vertex, it's even tighter than that. And then on the liquidity, on the intent-centric framework, there's an execution cost as well. So those costs are borne by the user who's trading. Pair then charges a platform fee on top of that at point of execution. So we charge an open fee and a close fee. And those fees are charged in ETH or USDC terms. So we take an amount on each trade, and the amount can vary. It varies depending on how many pair tokens you hold, on how much volume you're trading, and whether you're using a ref code. So I can't give you like an outright cost, and sometimes depends on the underlying market you're trading. But we do want to be competitive on fees. And the interesting thing is all those fees accrue into one pool, 80% of which is shared with stakers of the pair token. So the pair token's not live yet, but when the pair token does go live, there'll be a staking mechanism where you buy it, you stake it. And if you're staking your pair tokens, then you can claim 80% of all the protocol fees that are generated, as well as getting some kind of benefit on your trading fees for yourself.
Do you need to lock them long term in order to
No,
earn
you
the
can
revenue?
unstake at any time.
Nice.
Do you have any system in place where stakers who are more like long-term aligned, aka like people who stake for, let's say, 1 year, they get like a multiplier
So we're
bonus or anything
just
like that?
thrashing out the final details of the tokenomics for the staking contract. So I don't want to be too black and white on how it's going to look, but essentially we want to reward the people who are loyal depositors, and that's at the cost of the people who are tourists and come by and just deposit and try and claim some fees and leave again. So for sure, like the more loyal you are and the longer you've staked, the higher percentage, all else being equal, of the pool that you'll be able to claim.
No, that's brilliant. And when can we expect the
Good
tokens
question.
to come out?
So I'm a boxer. Like boxing is
Always.
boxing is my sport of choice. And the way I like to think about V1, so everything we've done on GMX and Vertex, is like our left jab, right? We're throwing at the market this thing, and they're like, "Whoa, shit! I didn't see that coming," right? And then the cross is the intent-based product, because suddenly you've got like this brand new way of trading on chain in a scalable manner. And the follow-up to that is the token launch once we've done both, right? And so right now, with the timing I gave you, mid-Feb for V1, end of March for V2, you're looking at kind of early Q2 for token launch. These timings, any founder will attest, is always a little bit fluid, because things always take longer on dev
Of
side
course.
than you expect, right? And one of the things, like I know you wanted to talk about like learnings as a founder, Waj. One of the things I've definitely learned is to manage your expectations, because we've got incredible devs, right? Like full stack devs who are really good, actually, expertise wise on the back end of things. And even with those 6 or 7 guys working on this has taken way longer than we expected, because there's just so many edge cases, there's so many features and things that we want to add, unexpected bugs, things like what I just talked about with the staking contract, and having like a multiplier system and an exit fee for people who kind of just are tourists to the staking pool or whatever. It takes time to code and test. And when you're in the territory of doing something brand new, where there's no precedent, like everything I talked about with the NFT, it takes time. So realistically, I think, let's be conservative, I think the token drop will probably be in Q2 at some point.
Sounds like real
I
building.
think makes sense.
Yeah, I'm saying sounds like actual building, what you're describing there.
Yeah, I mean, look, we all build on top of each other, right? So like, the nature of crypto is open source software, and we definitely get help where we can. Um, but it takes time to build like anything really good and sustainable.
How many people are on the
What's
team?
been your biggest?
I'm
Oh,
sorry.
go on.
I was just
Go
saying.
ahead, the advisor.
I was just saying, how many people are on the team? How many people are you? And if you can maybe share, like, from how many places? Like, is there a majority of workers and contributors that's like doing it in the UK, or are you like spread all around? And what kind of like culture does it bring to the
Yeah,
organization?
so there's 11 of us on the team, depending on how you count.
Nice.
Developer talent is Bulgaria, Nigeria, and South America, with one Indian. So we're like the
Cool.
UN in some regards, and then the rest of the team on the business side or the community building side are in either Asia, US, or in London. So pretty diverse team. Um,
Yeah,
and I think having people from all these different regions really gives you like diversity of thought in terms of how different people think about building and
exactly.
stuff, right? So people talk about diversity as like a checkbox, but the like benefit of having diversity, and the thing that's missing is having like a female on our team right now. We don't have that, but the benefit of having this neurodiversity, if you will, of sorts, is people just think differently about the markets. They think differently about product, and we have a shared vision as a team, but differences in the best route to get there. So um, it's been a real kind of learning to understand that different people have different inputs, and your vision as a founder, even though it should be uncompromising, it might not necessarily be always the right way to do things.
For sure. I think a founder that knows how to communicate well with his team, not to mention a founder that is able to pick the right team, first of all. And by the way, like do the necessary changes at some point if they get to it. I think that a good leader of a project has to be very responsive, both to his community, to his team, to everyone. He has to really be on top of things, and he also has to he has to think about a lot of things that are not necessarily always product related necessarily. He has to think about, like, I don't know, how do people get by and how to really extract the most out of any participant. I think there's a lot of challenges in leading any kind of business, especially this kind of like business when I'm pretty sure that with the most people that contribute, you've never met or anything like that.
Yeah, exactly. I mean, like we've done two on sites now, one in Lisbon and one in Berlin. And it's really, you can't replace meeting each other in person. But even then, not everybody can make it, right? Visas and family commitments and things. So yeah, it's a unique challenge building a Web3 business for sure.
By the way, are you all Anons though?
Uh, yes, but like you wouldn't have to look very hard to find out who we are. Like in conferences, I have my real name. I had my camera on earlier. Same with the rest of the team.
So like semi-Anon. So like semi-Anon,
Yeah,
you mean?
I'd say so, right? Like the the reason for being a non is just because we're building a decentralized front end, right? Like if you think from a legal term, what we're doing, legal perspective, we're building a decentralized front end for trading, which is ultimately going to be governed by the token holders, and the token holders delegate decisions via the DAO, right? Like that's the legal setup. The reality is bootstrapping this kind of thing, and going out and spreading the word about it is done by human beings. And you need that kind of FaceTime with people.
By the way, can I ask you about like all the like I don't know, the legal stuff, the arrangements? Because I'm talking to some founders who I don't know, they do so much code and stuff and business development and so many meetings, and sometimes some of their biggest challenges is how to, like, I don't know, legally and regulatory make it work in a way that they're just calm enough to keep working.
Yeah, I think your point about being a founder and like having to juggle different things, marketing, dev stuff, legal stuff, It's probably no different in any business, but legal itself is a unique challenge, especially wherever you have some kind of US nexus, right? So thankfully, we don't have much of a US nexus, like we have some kind of geo-blocking of US users, and we have disclaimers that you have to kind of accept the terms and conditions when you join and trade. And we don't have many, if only one person of the team who's kind of US based at any given time. So there's definitely unique challenges there, and I don't see it getting much better, to be honest. This whole like action that the CFTC and the SEC and like every other alphabet soup of 3-letter, 4-letter agencies in the US took against CZ, I think it's the beginning, not the end of the regulatory onslaught. Especially as it pertains to DeFi. The bright side is there is pockets of the UK, there's pockets of Dubai, there's pockets of like other places, especially in Asia, that are really receptive to this. And one thing I'd love to like chat to Waj about offline is I think the UK is actually going to establish itself as a bit of a hub for crypto builders, because they want to engage with people.
You know, it's
Yeah,
an
no, I think they-
it's
I
a
think,
talent it's
I've
an
noticed
industry
that a
full
lot.
of
I think,
talented people, and you know, if like someone's gonna recognize it, you know, some place is gonna, or at least some places are gonna recognize the fact that they can draw in just a whole lot of talented people and create a lot of finance and revenue out of taxes, even, or I don't know, from anything else, because people will want to like specific places, just like you've mentioned, will want to attract that capital if places like the US are gonna like you know, make it harder and harder for builders to build there. They won't try forever. They're gonna go to where the opportunity is, at least quite a big amount of them, because this is a layer of society that can actually decide to, okay, we can pack our bags and move. You know, these are not like farmers that have to only work where they work and like have necessarily a very strong connection to their land or whatever. For many people within the industry, especially young ones, I think that it can be pretty not that big of a deal for them to decide, okay, I'm taking my stuff because I don't want to be like to live as a fugitive. If I can be a dev in Dubai or a fugitive in the US, for some, I think they would rather be devs than fugitives around the world. And I definitely, by the way, I really hope that the US wakes up in a way, and for them mostly, and learn how to like be able to keep so much of that talent, because still so much of the talent in crypto and DeFi, like so many Americans, I don't know, it will really be, in my opinion, foolish up to the point of criminal by the US to fumble this industry.
I think it depends on the dominant party that's in place. Like, if I was listening to Ryan Selkis, the founder of Masari, who, by the way, is like a big fan of pair trading and will be one of our kind of first traders. I was chatting to Ryan the other day, and I listened to him on another podcast, and he said if we have another Democrat party in the US, it's over for crypto in the US.
I don't want to get too political, but I think it can be over for some other stuff as well. But again, this is just my opinion. But I do think that in general, even if we look just at like the crypto side of things, usually like when I think of the Democratic Party looking at crypto, the first thing that pops to mind is Elizabeth Warren. You know, like that's the attitude that I actually feel that the Democratic Party in the US has towards crypto. And I think that, I don't know, on the Republican side, I think they're much more open to capitalism in general, and by that also to to some crypto activities. And I think that maybe there on the Republican Party, there's like a bigger realization of the fact that this industry can just like slip away out of their hands. And they know that there's a lot of money on the table. I don't think they'd want to lose it. So, by the way, Haf, I wanted to ask: do you guys have like a legal entity that you've had to like establish in order to work? And also, by the way, like it's related a bit. Like, how did you guys? How were you guys able to work on the project for so long? Did you self fund it? Did you had some investors at an early stage? What exactly was the background?
Yeah, so we've got a tri-party setup legally. So we've got a Cayman Foundation for the DAO. We've got a BVI entity for the token issuance, the SAFs that we've signed, and then a UK tech company, a UK DevCo, which is where like all our fiat expenses are from, and we kind of have a service agreement with the DAO and with the BVI entity as well. So that leads nicely to the second question, which was about fundraising. So we mostly raised for this round, and we did SAFT agreements with both VCs and with angels as well. So we did a seed round at 12.5 million FTV, and then we've just we're just closing up a strategic round at a slight uptick to that at 15 million FTV as well. So those are the two kind of private rounds that we did, and then we did a small public sale as well. But yeah, we didn't advertise that too broadly.
Okay. Sounds good.
Did you want to say something, Waj?
No, go ahead, the advisor. Go ahead.
Is there anything that about Pear itself, about the product itself, that we didn't touch, that you feel like we should mention?
I think we've touched upon pretty much all the kind of salient points of what we're doing. I think what's interesting is to talk about maybe what's going to come next, because for us, Pear isn't just a case of like building this thing and then people trade it, we earn fees and launch token and off we go, right? There's a lot that we want to do on the product side. So for example, we want to have user generated vaults, a bit like Hyperliquid, right? Where people can come in, and especially if you have like the top 10, 12 kind of high profile pair traders, if they spin up their own vaults, you don't need to constantly be looking for narratives and pair trading. You can just kind of tag along in these guys. I'm from the DeFi.
I like that concept.
Yeah, and I'm from like the DeFi summer school, right, of 2019, 2020, where people have all this ETH and USDC on chain, and they're looking to earn yield in a safe manner. And pair trading can be that, in the sense that you can put money into a pair trading vault, someone else is doing the pair trading, and you might make 20%, 30%. Now, by crypto standards, that's not a great return. But like risk adjusted, it's an amazing return. Right? You are long one thing and short another, and rotating between them, and making, like, compared to TradFi, much decent returns. So we want to do features like that. We want to add other features over time to the pair trading engine, like how we rebalance our positions. So right now, if you do $1,000 positions, $500 goes to the long, $500 goes to the short. We want it such that your positions can rebalance frequently based on beta, based on correlation, etc. And that's where it becomes a bit more of an institutional product as well. And so with that in mind, the final piece that we want to kind of release is thematic baskets. And the idea there is that you can be long an entire basket of things, like being long a whole bunch of LSTs, or being long a bunch of AI tokens and short something else against it, right? And that, I think, is how we're going to move Pear from being this like somewhat niche long-short trading platform to like the most accessible narrative trading platform, because suddenly you can go long a basket of decentralized compute things, let's say like Vendor and Tau and things, and short something else against it, Cardano, just to rustle some feathers.
Always.
I love that. Yeah, I love that because it lets us long attention. And I think ultimately in crypto, that's kind of how a lot of these narratives go. We long attention when we have these different sectors of crypto booming. You know, at one time it'll be AI, then it'll be DePIN, then it'll be DeFi, then it'll be real world assets. Like, you know, we have these rotation games all the time, and I guess with that you can constantly just be long attention.
Absolutely. Good way of framing it.
Yeah, no,
Where do you
I'm
see us?
excited. I'm excited for that.
For sure, for sure. Where do you hope to be, like in a few years, with Pear Protocol, Haf?
Sorry, I'm an old man. I'm moving my standing chair to sit down. That's what that background noise was. A couple of years from now, like, what would success look like to us? So I think we would
Yeah.
have built out all these products that we want to build out, thematic baskets, user-generated vaults, and then have been deployed on several different chains. I anticipate the intent-centric model to kind of grow and scale over time as well. And whereas like less than 1% of all DEX trading volume takes place in an intent-centric model, I think that number can become greater than 50% at some point. And what that translates to is like a really sustainable business model, right? One which generates fees. The traders on the platform are happy because they've been pair trading and generating returns and not getting liquidated. The LPs are happy who have bought Pair and staked it and earned the yield from the protocol. And Pair as a management team is happy because we're taking enough out of the remaining 20% to reinvest in the business and scale it and live an okay lifestyle as well. So for me, then Pair becomes like the first thing. If I'm being really kind of candid, my like passion is education. I want to build schools, and I want to build schools. Yeah, I want to build
Nice.
schools in India. So like that's like what I would do with my time.
Wow. Go for it, man.
No, I love that.
Really go
I
for
love
it.
that. I think I similarly have a passion of education, and I think putting that forward, like when you have some sort of motto in life that you want to kind of do something and give back to the world, it makes what you do so much more meaningful.
I definitely think that passion changes the game. And I can see that now I'm finding myself here with someone who wants to build schools, a doctor, and a degen like myself.
There you go.
Nice, pretty nice. Not that bad. By the way, just before we wrap up, I want to ask you one more thing. Half. How? I'm sorry. What kind of advice would you give young builders today? I know we touched on it a bit earlier, but like if you have to give like one or a few basic advices for young builders within the space who might be listening and like, maybe in the early days of their own protocols and they're hearing about all this stuff, a legal entity in the Cayman Islands and then something with at BVI and all that, like, how do they like what is your advice to them in order for them to like keep building, believe in their product? What are the like few keys or things they should be focusing on in order to find themselves actually fulfilling their dream and actually delivering the products they're working on?
Yeah, I wouldn't get discouraged by like all this talk of complexity, right? Like sourcing developers and legal fucking speak and the regulatory landscape in the US.
Yeah.
At the end of the day, like just build something, MVP, show it to people, and if it works, then find a leading investor, right? Somebody who can handhold you through this whole process and give you the capital to do that. Sometimes that's an angel investor or two. Sometimes it's existing DeFi founders. Sometimes it's a VC firm. But everything kind of starts with you validating the concept, and that doesn't require lots of money. A lot of the time, it just requires like a really clear vision of what you want to build, some kind of MVP and a pitch deck. And it's a daunting task to sit and make a bullet point of everything that needs to be done. I think it would be better to take like some baby steps, speak to some of your potential users, build something out, get a deck together, and just start talking to people. Like crypto and especially DeFi is the most unique space where you can slide into anyone's DM or you can comment on their Twitter post or whatever, People are like super
Yeah,
friendly, man. People want to help.
no, it's true. And by the way, I don't know if it's gonna last forever because I think it comes from the fact that the industry is still pretty small, and people don't feel like it's a zero-sum game. People still feel like it's about supporting each other and growing the whole pie. But at some point, who knows? And also, I think it might be related to the bear a bit because I think that once the bull comes, there's so much more noise and so much more spamming of messages and all that kind of stuff, and it's not necessarily that easy to connect when you have all that distractions. So I definitely agree on that one that like whatever you want to do in crypto or in the ecosystem itself, do it. Don't wait. Send a DM, create a connection, ask questions. Don't be embarrassed to embarrass yourself. It really is all about trying, connecting, doing the best that you can, whatever way you have to do it, to just bring value to some people in the space. And I agree. I some of the people that I meet online are some of the friendliest people that I've ever met. And I don't even know his name. I don't know where in the world he's from, but he's already doing me all kinds of favors. Just because we interacted a bit and connected on some stuff, but we're already benefiting each other. It's surreal in a way, and I definitely think that anyone that is curious about this industry and this emerging market should definitely be active in exploring it and not just to waiting and seeing it from the sidelines. I know it was one of the smartest things I did the past decade for sure. And it's nice to be with smarter gentlemen like yourselves who are younger and already doing it. Not to mention again the fact that you're already planning on saving lives and educating the weaker populations of the world. All the power to you. Much fun. Anything else you want to add, Waj, before we wrap this up?
No, just I think it would be good to tell the viewers where they can find Pear Protocol, where to follow you, and yeah, I can't wait for your next products to come live. I'm a big fan. I've been using Pear Protocol, and I recommend everyone who is actually watching this right now to go and give it a go. Some of you will be watching months in advance, and so by then Pear should be in full mainnet. So go and give it a go. See, you learn a lot by trying, and I think trying out novel,
Definitely.
innovative stuff in DeFi is one of the best things that I recommend people to do. So yeah, go and give it a go.
Amazing. So yeah, I think you can probably link these, but at pair_protocol on Twitter, and then myself, I'm at HUF HAUS 9 on Twitter as well. And the website will be pair.garden as well for you to pick your pairs.
That's amazing.
Perfect.
That's incredible.
Thank you so much.
By the way, Haf, are there going to be ref links?
There will be, sir.
Why not? Indeed. Why not? Indeed. Talk to you about that as well soon, to be honest. We're working on some stuff for Leviathan News on that front as well. Either way, guys, thanks a lot for your time. Haf, first of all, man, thank you so much for coming. It was honestly a pleasure. Looking forward to what you guys are doing and building over there. Looking forward to seeing the reaction from the public of the users and what they say once it's out. I really think the concept is extremely fun, extremely cool, extremely simple, and puts you guys in a very unique position within the landscape, within the landscape of the industry. And again, thank you so much for coming. Wish you a lot of luck. Thank you, Waj, for another amazing episode. Really had fun. Looking forward to the next one already. And thanks everyone for tuning in. Feel free to give us any comments, remarks, questions, whatever you want us to do. Feel free to tell us who you want us to have on as well, so we can maybe try and get them on indeed. And feel free to look for us on both the Leviathan Twitter, Telegram, YouTube, Spotify, Sam puts us pretty much anywhere on the map that's on the online digital map that is possible. Thank you very much, guys, for being with us. Thank you for your time. Bye, folks.
Ciao. Bye.